The market is crashing and your portfolio is in the red, and it feels like there is no end in sight. But what if I told you that professionals are still making money in this bear-looking market? I'm Valentine, and in my 4 years of trading, I've learned from some of the best in the business. Today, I'll share with you some professional strategies where you can highly profit even in a bear market. In this video, I'm using the same strategy that I used recently on Tesla, and the viewers of this channel saw a 30% return in just 4 days. But that's not all. If you sign up for my newsletter in the description below, I will share with you my most profitable stock strategy. Beginners and professionals can use this strategy. It is a strategy that helped me make a 70% profit in HIM stock in only 2 weeks. Don't let that chance slip away. Sign up to the newsletter, get that free lesson, and go through it. Subscribe to the channel and turn on your notifications because I release these videos a day before the stock market opens so that you can profit in time. Now, in this video, we are going to see how to profit in bear markets. We'll see how to find the strongest stock in weak markets. We'll see how to prepare for the long side when it's a bear market, and we'll also see how to profit from the bear market itself. Anyway, before we go into the biggest part of this video, which is profiting in the bear market, first we should know what we should do when a bear market comes. The first thing to do is to scale back on your trading. And why do we do this? Because in a bull market, your success rate is going to be about 60 to 40%. This is when things are going well. But the problem is that in a bear market, about only 1 in 10 stocks might be going up. That means that for every trade you take, if you really want to break even on the long side, then you have to be making a trade that will return 10 times your risk, which is a very rare occasion in trading. It's time to reduce on your trading. The second thing to do before we go into the biggest part of this video is to keep an eye on the best stocks in the business. While the bear market is forming, the best businesses are actually correcting, and they're forming nice bases that will later break out into really good highs. We can see NVIDIA. It looks like NVIDIA really had a good run up this year. On this side, this is the weekly chart, and this is the daily chart. On the daily chart, if you look at the chart, it looks like NVIDIA went up 170%. That was the biggest move it had this year, 170%. But what a lot of people don't know is that NVIDIA spent a long time sitting. It sat from July of 2023 to January 2024. So that means it spent 7 months sitting and doing nothing. That was the bear time for semiconductor companies. And during that time, it's good to keep an eye on these really strong companies. We can see this one did 170%. As you can see, SMCI was a very good pick too. It went up huge this year. It went up about 250%. That was the largest move it went up. But what a lot of people don't know is that from August of last year to about January of this year, for 170 days, which is about 6 months, the stock didn't do anything. It was just sitting there doing nothing. These really tough times are times to focus on these really strong businesses and be ready for when they jump out so that you can get these 200% moves when they come. Now that's the first part of the video. And now onto the really good myth, which is how to profit from these bear turns. When the stock market is bearish, not all stocks are going to be falling down. You don't want to go out there and just short every stock on the market. Just like when a lion is trying to hunt a herd of gazelles, it's not looking for the strongest gazelle to hunt down. No. It's looking for the weakest gazelle. Also, us in the stock market, we have to look for those stocks that are already suffering. We have to look for those weak gazelles so that we can pounce on them, because now when the market is moving down, those weak stocks are the ones which are likely to crash the most. And how do we find this? One really nice way is to keep an eye on ETFs the whole time. I always do this in my newsletter. Every day I look at ETFs and I'm always on top of the industry rotations. But when we constantly watch an ETF, we can see the bigger picture of an industry. And then after seeing the bigger picture, we can look for those particular stocks. And I'll show you exactly what I mean. Here are some ETFs which I have been shorting recently. Number one is ERX. A good way to short in a bear market is that you want to wait for a very good setup. And one good setup is a bounce off the 50-day moving average. This yellow line that you see here is the 50-day moving average, equivalent to a 50-day moving average on a weekly chart. I'll also put a 50-day moving average on this chart. What you're trying to look for is a stock or an ETF that is failing on the 50-day moving average. Here we can see that this ERX, it forms a red candle. And when you see a red candle like this, you want a lower close. It's closing lower than the previous day, and it's closing below the 50-day moving average. When you see this lower close, it comes here, it fails on the 50-day. It's only there for about 3 to 4 days, and it fails and comes back down, and the 50-day moving average is sloping down. This is one of those weak gazelles, and we pounce onto it. Now, what you can do is to normally just get the ETF for yourself. We draw a trend line over there. And on this day, when it gapped down in the morning, we could have shorted it at 62.71 and look for about 15% return. The risk would be about 3%. Normally, I will keep the risk up here, maybe keep it slightly above the 50-day moving average, and I will look for maybe about 15%. Because these ETFs that are 2 times, this is the 2 times ETFs. It's the average of several stocks in the energy sector, but it moves twice what those stocks will move. It's a bit more volatile. I'll look for 10 to 15%. I'll risk about 5%, and to the good entry, and then you can wait for it to see how it's going to collapse. After finding the ETF like this, another thing that you can do to even find these really weak stocks is to go in and look for ERX holdings. This ERX ETF, we can see its holdings. We can see that these are all energy companies. And then from there, we can now come into our software and start looking for energy companies in particular. This is the energy sector. I click energy sector here, and then there's the industries in the energy sector. And in these industries, I'm trying to look for stocks that are weak. This is the industry chart up here. You don't want something that's overextended. You look for something that is not super overextended. Everything is overextended right now. But a few days ago, it was not overextended. That's one way you can find stocks that are really weak and you start shorting them. A good example that also was really weak recently is steel. Here we can see the steel ETF. The first thing we do is see what is happening in the steel. You can see SLX Holdings, it's holding Rio, Vail, New, STLD, RS. These are good stocks. It's holding the average of all of these stocks. And we can see the average of all of this stock. It fails on the 50-day moving average. When we draw our trend line, it has broken through the trend line and it gapped down. We can see a close below the previous candle. It failed on the 50-day, there's a close below, and as soon as it goes below that candle, we start shorting. It had a gap down. I really like these gaps because I know that I don't want the stock to come back and fill this gap. This is an ETF in particular. What we can do is we can short the ETF itself, or we can look into the constituents of the ETF. We can see there's Rio, IO. We can see it's going to have a particular pattern. Rio, the steel stock, it failed before. For it, its shorting day was about here. 66. This one's a bit late. Since the ETF is the average, it doesn't mean that all the stocks will be acting the same. Some will have moved already, some are still setting up. Another one is Vail. This one is not a good time to short it. It's also overextended on the downside. This is the way you can really look for these stocks. STLD, now this is perfect. It's practically emulating what we saw. You can see it struggles to go up. Whenever you see a stock struggling to go up and then it has a sharp breakdown, that is a very good time to short the stock. It failed on the 50-day. We short it on this day. This is also a good thing to short. You can short either this stock or the ETF of the steel. Or we can also go into here and then we can look for steel companies. I think it's in basic materials, look for steel. Which companies are ready to be shorted for the steel sector? We can see there's STLD. We can see it failing on the 50-day moving average. The 50-day moving average is sloping down. If we come back into Trading View, it's the same company we already looked into. There's CLF failing on the 50-day moving average as well. This is what I like. You can see that the ETF short that was failing on the 50-day moving average. What you can do on that day is just go look at all these steel stocks. Now here we can see CLF. It's a good time to short. You could even have shorted it earlier here, put your stop about 5% above there, and you'd have already had like maybe a 10% profit now. When stocks are going on the short side, they don't fall too much. Don't expect like a 40% move on the short. No, this one you have to be conservative, just aim for about 10 to 15%. Because I used to give away all of my gains on the stock side because I was expecting 30%, 40%. But on the short side of things, stocks don't fall that much. We can look at New. This is also a steel company because all companies in a sector, they normally move together. When a sector is falling, as you can see, this is a sector chart and this is the stock chart, you can see that they all pretty much have the same pattern. It's not exactly the same. You can see all the stocks, they're all failing at the 50-day at the same time. These still stocks are a good time to short. And also, a lot of people, once they see such a good opportunity, they want to put all their money into this one. And I would say no. When you find a sector that's going a certain direction, don't lose your word over it. Just take maybe 2 stocks, 2 maximum in that sector, and then start looking for other sectors. Because if you're wrong, you're going to be punished. Just take 2 stocks. You can either do the ETF and stocks that I was showing you. It is your choice. Another one is URNM. This is a very good example. This one failed way before the market started correcting. And when did it fail? On the 50-day moving average. We can see the 50-day moving average there. It failed here, but it's not a good time to short. What you normally want to wait is for it to fall down and come and try to go up again, and then it fails. On that particular day of 12th of July, it failed. And we could have shorted it, and right now you'd have had a 21% profit on it. And what was the risk on this one? Sometimes the risk is very small. I normally like putting it also above the high of that candle. You risk here about 2.5%, 2.7%. If you put in $1,000, you're only going to risk $27 and you're going to make a $200 profit. And I feel like that's a very good bet. I already know uranium stocks in my head. I'll show you some. They come in here, CCJ, 15th of July. What was that day? Which was the day to short? It was on this particular day, 17th June. It fails on the 50-day. It comes down. This is the weekly chart. Comes down, fails. The industry is failing because we saw the ETF. 16th of July, we short on this day. Our stop could have been about 4%. It's a very good risk. If you risk $1,000 or if you risk $10,000, you're going to lose $400. But right now you'd have made $2,500. And of course, I told you just aim for about 20. For me, I'd have already been out here. I wouldn't have been in for the earnings. I'd have already just taken my 15%. If I had $10,000, I'd have risked $400 to get about $1,500. Another uranium stock is UUUU. Same thing, fails here. Risk is about 8%, which is huge. You could have gotten your 17% already. Another one is UEC. I really love this one. What was going to be our risk? About 9%, which is huge. If your risk is 9%, of course, you buy less shares. Let's say you want to only risk $40 always. This calculator can tell you, okay, only get 67 shares. You must master this process. Please master this process. It's very easy. And of course, in my newsletter, I'll be telling you which ETFs are ready to be shorted. And that means you can look deeper into those industries and you can short and make money on the short side. MSOS. This is cannabis. This is one of my short positions right now. I already told you what it is. You guys know what it is. It failed on the 50-day. I didn't get in here because I didn't see it, but it came and failed again here and I shorted. We have our line there. Come put our risk here. It's about this, about 7%. I don't remember what my risk was. Actually, I think I got in here. I think my risk is about, I think it should be about maybe 6%. And I'm just looking for 15 to 20%. And of course, it's according to the ETF. So if you see an ETF which is 2 times the movement, you can look for 10 to 15%. If it is 3 times the movement, which is a 3x ETF, then look for maybe 20 to 30%. Because another one which I shorted recently, I got out really quickly, was this one, MEX. I shorted it on this day. I just looked for about 20% and I got out at this price of 15.6. But you can see it went farther and I missed out on some profits. Here it went and it's now down like 30%. So I could have made even more profits. So I hope you've enjoyed this video and I hope you've understood the process of studying the ETFs, because the problem is that the stock market has over 10,000 stocks. If you study the stocks on their own, it's just a lot of work. But if you just study the sectors of the stocks, which are not that many, then you can get a bigger picture on which stocks I should look deeper into. And these moves, they're not difficult. Look here. This one also failed this time. 50-day moving average is falling down. It comes and fails. Here it failed, but it didn't. The price didn't come and go below that low. We don't enter that day. Second time it comes, fails again. Price goes below that low. We put our stop just above the candle. And the biggest move it did was 48%. And as I told you, I'm not looking for that 40%. That's really huge. Most likely, I'd have just gotten out at about 20 to 25% on the short side. Hope you enjoyed this video, and I hope you've learned the process of profiting in bear markets. Wait for the ETF to be failing at 50-day moving average. That's very easy. Look for those particular ETFs. Right now, there's many ETFs which are falling, but they're not failing correctly. It's a bit risky to get in. Like this one has crashed, but it doesn't have a good setup. This one, the setup was there, but it wasn't beautiful. I didn't look to short these as well. I hope you've seen how to find the ETFs. Look deeper into the ETF, find which stocks it's representing. If it's like uranium, then now start to look into uranium stocks. Then don't overput your account there. Just get 2 stocks, because when you get it right, you're going to get about 6% of your account increase. So you get a 6% profit, you're only going to risk about 1% of your account. Actually, even 0.5% of your account. And I think that's very good risk, and then the reward is going to be great. And if you fail, then you've only lost 0.5% to 1% of your account, which is not a huge risk. May the markets be with you.